Hello friends, welcome to the September edition of Monthly Viewpoints. Global equity markets took a breather in the month of August given the volatile macro backdrop. Indian markets were also flat, although the Nifty is up almost 7.5% year to date. If you look at the global macroeconomy, the Fed rate hikes seem to be taking an effect and there is an apparent slowdown in the US economy as seen in the non-farm payrolls report. The Chinese recovery is also much slower than expected and the Chinese government is only providing very targeted and piecemeal stimulus, which has been a disappointment. The key risk on the global macro front is higher than expected inflation in the US and a protracted slowdown in the Chinese economy. Coming to India, the economy is going on quite well as indicated by high frequency indicators such as the GST collections, electricity consumption and the PMI numbers. The key risk for India remains the El Nino, because of which the monsoons can be lower than anticipated, having an impact on the rural economy and rural demand. Coming to earnings, the first quarter earnings season is over and the overall earnings growth was in line with expectations. We continue to maintain our projections of around 15% earnings growth for the Nifty over the next 2 years. The positive news is on the flows. Domestic flows continues to be strong with SIP flows of almost 15,000 crores a month, and even in August, India got about $1.5 billion of FII inflows, which was amongst the highest in emerging markets. Now, given the backdrop that the domestic economy continues to do much better than the global economy, mid-cap and small-cap companies are faring relatively better than large caps. Even in terms of the stock market, mid and small caps have outperformed large caps in the month of August. We have seen some moderation in valuations and the one-year forward multiple for the Nifty is now in line with expectations, and even compared to other emerging markets, the valuation premium for the Nifty is in line with the long-term average. Now, given the rise in interest rates, even fixed income is offering reasonable returns, and with a correction in gold prices, even gold can offer around single-digit returns. With the rally in equity markets year to date and valuations near the long-term averages, we can only expect moderate returns from equity markets. Hence, a recommended strategy for investors is to follow the multi-asset allocation approach and have equity, fixed income and commodities in the portfolio. In terms of themes, we continue to remain positive on the domestic exposed sectors such as banking and financial services, discretionary consumption and domestic manufacturing. We offer a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।